Well, happy Monday once again, everyone. Bryan Devore with Devore Realty Group, Berkshire Hathaway Home Services, California Properties with another Monday market moment. We're going to ask another question this week, and the question is, are the foreclosures coming? Well, not everyone, but a lot of people talk about, well, the market, it must be in a bubble. The foreclosures are going to be coming. Are they? Well, we'll answer that in just a couple minutes, but first, let's look at the latest stats. Right now, we have 3,075 homes for sale throughout the county. It is up 106 from last week, which was 106 more than the week before. So that's quite a big jump over the last couple of weeks. Median list price $999, higher than the week before. Average days on market 42, 2 fewer days than the week before. Pending sales 2305, that's up 29 from last week. Median list price of $875, which is higher than the week before. No change in the average days on market for the ones that are pending, 26 days. Months of inventory has gone down. 1.72 was 1.78. So we're seeing a little bit of an easing there in the months of inventory. Still in a seller's market, creeping more into a high seller's market. Here's a chart showing total actives and total pendings. You can see that the total actives has really gone up quite a bit since the beginning of the year. Pendings leveling out just a little bit. Here's the Stephen Thomas reports on housing chart, the most recent one that shows active listings. And you can kind of see where we are here, the difference between the 3-year average prior to COVID versus where we are today. It's a huge delta. And where we are relative to the years recently, we are a little bit higher than we had been in some other years, but still super, super low. And this gives you a little bit larger a viewpoint of the inventory in the United States as a whole. We can see where we had a big supply glut back during the Great Recession, but where we are right now, supply scarcity way down here. Think about that as we get to the answering of the question of foreclosure situation. Here's the demand side of things, and this shows the big drop in demand relative to other years. Again, here's where we are, lowest demand that we've seen in quite a long time, in years, and much below the 3-year average prior to COVID. Not a huge drop from last year, but still lower than last year. Just not enough inventory for people to buy, and rates, being higher. What happened last week? We saw 783 homes come on the market, 17 fewer than the week before. Median list price of $949, a drop from the ones that came on the market the week before. New pendings 401, also a drop of 23 from last week. Median list price of those homes $880, higher than the week before. Average days on market 21, 3 more days than the ones that went into escrow the week prior. New pendings listed within the last week, 23. New pendings listed within the last 2. So interestingly, the ones that market for a week or less, and 53% had been on the market for 2 weeks or less, same percentages this week. 6% of homes are selling in a week or less. 53% are selling in 2 weeks or less. Last week, we saw 350 homes close escrow, slight increase of 6 from the week before. Median list price $862.5, a drop from the week before. Median sales price $865, also a drop. And the difference between the median list price and sales price is closing just a little bit. Average days on market 23, no change from the ones that closed escrow the week prior. Least expensive sale was in Descanso for $200,000. I think that's the first time Descanso has shown up on this report. And the most expensive sale, $6,955,734, very specific number, in Pacific Beach. Also, I think the first time that Pacific Beach has shown up on this report. Here's a chart showing new actives and new pendings and new closed sales. New actives lower than the week before, new pendings lower than the week before, but new closings higher than the week before. You can look back just about a month ago, and you can see the difference between the actives and the listings. Much smaller difference versus now, where we see a greater differential between homes coming on the market versus the ones going into escrow. Here's a chart with the prices. Again, a drop from the week before and the week before that. Nothing to be worried about. I think we're still kind of in the same ballpark. Here's the sold report that Stephen Thomas had, just to give it some idea of what some of the cities are doing. Alpine had 11 units sold in January. It's a little bit of a lag because of getting all the stats together. And then units sold last year was 14, so 3 fewer sold in Alpine this year versus last year. About the same in Bonita. So some were up and some were down. I'm happy to send you the report that has all the different cities. And then the market time report. Current actives in Alpine are 17. The demand is 15. So that's a pretty close ratio of supply versus demand. Bonita, for example, has more demand than supply. Chula Vista, more demand than supply. El Cajon, slightly more supply than demand. Encinas, a lot more supply than demand. Of course, the median active list price in Encinas is $2.5 million. Okay, are we going to see a bunch of foreclosures coming on the market? Stephen put in this week's report some of the different cities in the county and what their foreclosure situation looks like, and as a percentage of sales in the whole county. So, for example, the city of San Diego had 876 closed sales. Only 2 of them were foreclosures or short sales, which is when you're selling the home for less than what the person owes on their loan. So 0.2% of the sales in the city of San Diego were foreclosures. And that was the highest number, too. Every other city that you see here, 1, 1, 1, 1, very small percentages. The highest percentage was 7.1% of Jamul were foreclosures or short sales, 1 of the 14. And if we look at what's on the market currently and what has gone into escrow recently, 4 current active homes throughout the entire county are distressed, meaning for short sale or foreclosure. Foreclosure is 5, short sale 4. So 9 distressed properties are on the market, but pendings 13. So there's much more demand for those than supply, pretty much like everywhere in the county, and the market time is very low. So the long story short is we're not going to see a ton of foreclosures anytime soon. The market is just starving for inventory so much that as these properties do come on the market, they're being snatched up right away. We're not going to see a backlog of foreclosures and short sales like we did when the market was tanking back in 07, 08, and 09. I think we're doing okay. That's it for this week's Monday Market Moment. There was some big news recently about a litigation settlement with a lawsuit between some plaintiffs, class action lawsuit, and the National Association of Realtors, plus a bunch of brokers as well. It's becoming big news. It just broke. We're learning a lot more about it, and I do want to report on it. I don't want to report on it this week, so I want to make sure I have all the information and the correct information to share with you. But I will do that next week. We should have all the information we need to be able to share and what it might mean for you if you are looking to buy or sell a home. That's next week. That's it for this week's Monday Market Moment. Make sure to scan the QR code to track your home's value. If you have any questions about those reports or anything else about the market, feel free to give me a call or send me an email. I'm happy to help. Have a great day. Look forward to seeing you next Monday.
Thanks for watching Monday Market Moment with Bryan Devore. To request a transcript of this week's report, send an email to brian@devorerealtygroup.com.